The perfect time to evaluate our portfolios and identify the key opportunities that will drive growth not just for the next year, but for the next decade. The market has been a fascinating place this year. We've seen the second wave of AI implementation really start to separate the talkers from the doers, and the global economic picture is finally showing signs of stabilization after a few turbulent years. Before we dive in, do me a quick favor. If you find any value in this deep dive analysis, as always, a quick disclaimer. This is for informational and educational purposes only. I am not a financial advisor, and this is not financial advice. Please do your own research before making any investment decisions. The AI infrastructure powerhouse, my first pick for Q4, is a company that has become the undisputed backbone of the enterprise AI revolution. This isn't a flashy newcomer. It's a tech titan that has flawlessly executed its strategy. The stock I'm adding to heavily is Microsoft, $MSFT. Now, I know what you might be thinking. Microsoft? Isn't that a bit obvious? And you're right, it's not a hidden gem. But in long-term investing, you don't always need a hidden gem. You need a reliable compounding machine. The long-term thesis. Microsoft's moat is its ecosystem. They own the operating system on most of the world's computers. They own the productivity suite used by nearly every corporation. And they have the #2 cloud platform, Azure, which is tightly integrated with OpenAI's cutting-edge models. A company can onboard its entire workforce onto AI-powered tools through a single vendor, Microsoft. This integration creates incredibly high switching costs and a runway for growth that extends for years as they continue to upsell new AI features. The risks? Regulatory scrutiny is always a concern for a company this large. However, their strategy of partnering with companies like OpenAI, rather than acquiring them outright, has been a savvy move to mitigate some of that antitrust pressure. For me, Microsoft is the safest way to get broad exposure to the continued proliferation of artificial intelligence. 2. The unseen monopoly in advanced technology. Moving from the software that powers AI to the literal bedrock that makes it possible. My second pick is a company many have never heard of, but one that virtually every major tech company depends on. I'm talking about the Dutch giant, ASML Holding, $ASML. ASML doesn't make chips. They make the machines that make the chips. Specifically, they have a complete global monopoly on extreme ultraviolet lithography machines. These are bus-sized, multi-million-dollar marvels of engineering required to produce the most advanced semiconductor chips on the planet, the ones found in the latest iPhones, NVIDIA GPUs, and AI data centers. Why now in Q4 2025? The semiconductor industry is cyclical. The past couple of years saw some lumpiness in demand as the world digested the massive build-out during the pandemic. However, heading into 2026, we're on the cusp of a new major upgrade cycle. Foundries like TSMC, Samsung, and Intel are all ramping up their investments in 2-nanometer and even smaller process nodes. Every single one of those new fabrication plants requires ASML's EUV machines. Their order backlog is a thing of legend, providing incredible revenue visibility for years to come. I see Q4 2025 as a great window to build a position before that next wave of capital expenditure truly kicks in. The long-term thesis. The world's demand for more powerful and more efficient chips is insatiable. AI, electric vehicles, the Internet of Things, augmented reality. All of these trends require chips with transistors packed closer and closer together. ASML is the sole gatekeeper of the technology that enables this. Their R&D budget is enormous, and the technological barriers to entry are so high that creating a viable competitor is almost unthinkable. This is a true monopoly on a critical technological choke point, and that's a powerful position for a long-term investor. The biotech leader entering a new era. Host, let's pivot away from pure tech and look at a sector with equally powerful long-term tailwinds. Healthcare. My third pick is a company that has dominated its niche and is now using its massive cash flow to pioneer revolutionary new treatments. The stock is Vertex Pharmaceuticals, VRTX. Vertex is best known for its blockbuster drugs for cystic fibrosis, CF, a rare genetic disease. They've developed a series of treatments that have turned what was once a fatal childhood illness into a manageable condition for many. This has given them a near monopoly in the CF market, generating billions in predictable, high-margin revenue. For gene editing therapy, the big story for Vertex right now is their expansion beyond cystic fibrosis. Their CRISPR-based Casgevy for sickle cell disease and beta thalassemia has been on the market for some time now, and we're seeing strong adoption and life-changing results. Furthermore, their pipeline for a non-opioid pain medication is in late-stage trials, and positive data could unlock a market worth tens of billions of dollars. Q4 2025 is a critical inflection point where the market is beginning to price Vertex not just as a CF company, but as a diversified biotech powerhouse with multiple blockbuster drugs, the resurgent e-commerce and cloud giant. For my final pick, we're returning to big tech, but focusing on a company that has undergone a remarkable transformation in efficiency and profitability. My fifth stock for Q4 2025 is Amazon AMZN. For years, the Amazon story was growth at all costs. But since the post-pandemic reset, the company's focus has shifted dramatically towards optimizing its operations and expanding its profit margins. Why now, in Q4 2025? By late 2025, the results of this efficiency drive are crystal clear. The North American retail segment is a consistent profit driver, no longer a drag on the bottom line. Their advertising business has become a high-margin giant, rivaling some of the biggest names in digital ads. And most importantly, Amazon Web Services, AWS, has re-accelerated its growth. As companies move their AI workloads to the cloud, AWS, as the market leader, is capturing a huge share of that spending. I believe we are in the early innings of AWS's AI growth chapter, and the stock is still not fully pricing in the margin expansion potential across the entire company. The long-term thesis. Amazon has two of the most dominant businesses in the world under one roof. AWS is the backbone of the internet and a primary beneficiary of the AI arms race. The e-commerce and logistics network is unparalleled, and its growing advertising revenue. As you can see, there's a common thread here. These are all best-in-class leaders, benefiting from powerful, long-term secular trends, from AI and advanced computing to genetic medicine and the green energy transition. I'd love to hear your thoughts. What stocks are you looking at as we head into the end of the year? Are there any companies on my list that you're bullish or bearish on? Let me know in the comments section below. I read every single one. And if you made it this far and haven't already, please show your support by hitting that subscribe button and ringing the notification bell so you don't miss my next video. It truly helps the channel grow.